Very loving good morning to all of you. Today, again we will discuss and we will learn about cash flow statement. Because in my previous two lectures, you have learned about fund flow statement, how to prepare schedule of changes in working capital, how to prepare funds from operation, how to prepare fund flow statement. In this class, we will learn how to prepare cash flow statement. So let's start. Very easy. There is slight difference between fund flow statement and cash flow statement. As I already told you that when we define fund, then there are two ways to define fund. One is, in narrow sense, we can define fund. And when we define fund in a narrow way, then we define fund as simply cash only. Means whatever the cash we have in my pocket, that is fund. But when we define in a broad sense, then we have to include the assets which is very near to cash. That is, if we define fund in a broad sense, then we say that fund is cash and near cash assets. That is, whatever the economic resources you have, all you have to consider as fund. When we define fund in narrow sense, then we will prepare cash flow statement. When we define fund in the broader sense, then we will prepare fund flow statement that we have already prepared. So the narrow definition of fund is what? Cash. And that is the reason why we will prepare cash flow statement. Is that clear? So what is cash? You know that narrow definition, narrow sense to define fund is cash. Whatever the cash is in your pocket which you can pay any time for repairing of plant and machineries, or to pay the wages, or whatever. For this you don't need to wait for even 1 minute. Just you take it out and pay. So fund is clear. Now, in fund flow statement we prepare funds from operation. Here we prepare cash from operation. What is the difference between the fund from operation and cash from operation? In fund from operation, as you knew, that fund from operation is also known as adjusted profit and loss account. That is the amount by which the net profit in profit and loss account increasing, that you have to deduct to nullify the effect. The amount due to which the net profit of the PL account increasing, that you have to deduct, and the amount due to which the net profit of the PL account is decreasing, that we have to re-add back to nullify the effect. Then you can say, sir, what are those elements due to which the net profit of the PL account is decreasing or increasing? You know. That is, in PL account there are certain element which has no relation with operation, but that are expenses and losses or income and gain. The elements of non-operating expenses and losses which we are considering in profit and loss account on debit side of the profit and loss account, and because of that reason the net profit of PL account is decreasing, that non-operating expenses and losses or non-cash charges we have to re-add back when we calculate funds from operation. And what? We have to deduct also. Why we want to deduct and which element we want to deduct? That element of, that is non-operating income and gain. That non-operating income and gain which we want to add on the CR side of the PL account, and that amount will increase the net profit in PL account. So increasing which element? Non-operating income and gain. So that is non-operating income and gain due to that the net profit of the PL account increasing. So what? So we have to deduct to nullify the effect, to calculate funds from operation. Is that clear? So the same way we prepare here funds from operation. And then what? Then here we have to make some changes. What is that? In fund flow statement we prepare separately schedule of changes in working capital. Are you agree with this? Here we will, why? In schedule of changes in working capital, what you get that information? We'll get the information of changes in working capital, that is increase or decrease in working capital. Why we prepare schedule of changes in working capital in fund flow statement? Because fund flow statement will provide you the information of changes in working capital. So we will prepare separately the schedule of changes in working capital in fund flow statement. But here, no. Here we are not interested to know the changes in working capital. Why? Because this cash flow statement will provide you the information of changes in cash balance. Is that clear? In fund flow statement we will get the information of changes in working capital, but here we will get the information of changes in cash balance. So we are not going to make the statement of changes in working capital here. There we have seen that the impact of increase or decrease of current assets and current liabilities on working capital. But here we will see the increase or decrease of current assets and current liabilities on cash. We will consider all the elements of the schedule in cash flow statement also, but not in the form of the same way which we have seen in the fund flow statement. Here also we will consider the increase or decrease in current assets or current liabilities of the schedule, but the difference is what? Here we will see the impact on cash. So what? So here after calculating the funds from operation, the amount funds from operation we will consider here the same way, that is net profit. First of all we prepare this PL account. In PL account this is gross profit, suppose 1,000. This is rent, this is salary, this is non-cash charge and depreciation, goodwill written off, non-operating expenses on issue of shares, loss due to sale of fixed assets, loss due to theft or natural calamities. When we add this here in gross profit, we are adding non-operating income and gain, that is rent received, interest received, dividend received, this profit on gain or profit or gain on sale of fixed assets or debentures or shares, 300. So in gross profit, we are adding non-operating income and gain, that is 600, 200 plus 1, 300 plus 3, 600. So because this 600, the net profit is increasing. If suppose we do not have any amount here, then this is not 1600, this is 1000. And if this is 1000, this is also 1000. And if this is 1000, this is how much? 300. So because of this 600, this is increasing. If suppose I deduct 600, this will become 300. It means due to this 600 non-operating income, this net profit is increasing. So what we have to do? This amount we should deduct. Why? Because this is non-operating income and gain. But I want to calculate funds from operation. That is the fund which we are generating from operation. And we are generating the net profit only from operation. So the net profit which we are generating from PL account, this is not non-operating fund, because in this net profit, non-operating income and gain, non-operating expenses and losses is included. So we have to exclude. So after excluding this non-operating income and gain, 600. Add what? Add those items. Because of this, our net profit here is decreasing. Which reason? Due to this reason. Non-cash charges. Rent is operating expenses, yes. Salary, which is operating expenses, yes. But what about depreciation? This is non-operating. This is expenses, this is non-operating. And because of this amount, 50, 50, 100, 200, 300 and 500. And because of this 500, their net profit is decreasing. If suppose this 500, there is no such non-operating expenses and losses, then what happened? Then this should be 200, and this is suppose 1600. Then how much is this? This is 1400, 900, 11, 12, 13, 14. Because of this, the net profit is decreasing. So we have to re-add back. So here we have added non-operating this 50, we have added this 50, we have added this 100, we have added this 100, we have added this 200, we have added. Why? Because of this reason, but the net profit is decreasing, so you have to re-add back. And what we have to deduct? This 200, because of this 200, we are deducting this. Because of this 100, deducting this. This is because of this 300, deducting this. And 3 to 5 and 6, because of this, the net profit is increasing. So in 900, we add this, 500, so 9 plus 5, 1400. And in 1400, this 600 we deduct, so the amount is 800. This 800 is what? Funds from operation. So now, this fund from operation, we will take from this place, from here to here. Why? Because we want to calculate funds, cash from operation. Now, in fund from operation, we have to add. What we want to add? You know well. All the items of the schedule of changes in working capital, which we have seen in the PL, my fund flow statement. In fund flow statement, we have seen the changes of current assets and current liabilities on working capital. Here we will see the change of current assets and current liabilities on cash. So which change will increase cash and which change will decrease cash, that we have to see. In fund flow statement, in schedule, what we have seen, if the change, that is increase in current assets, has increased the has increased working capital. But what about this place? If the current assets will increase, then what do you think about the impact on cash? If the current assets will increase, the cash of the organization will decrease. Am I wrong? Let's see, take one example. Suppose if the stock in 2019 is 10 rupees, and in 2020 stock is 20 rupees. How it become 10 to 20? How the stock increases from 10 to 20? What you did? We have this increase is due to the purchase. Earlier we have 10 packets of Pepsodent toothpaste. Now 10 packets again we purchased of 10 rupees. So 10 become 20 rupees. So until unless you purchase, that stock will not increase. So until unless we purchase means what? Our cash will go outside from the business. We will utilize the cash. So at the moment we utilize the cash position of the organization will decrease. The same will happen in the case of debtors, receivables, and all these are what? All these are current assets. It means the conclusion is what? If the amount of current assets will increase, cash will decrease. So it means the amount of current assets if decrease, the cash will increase. Take reverse of this. Stock decreasing from 10 to 6. Where 4 gone? Because we sold 4 packets of Pepsodent of 4 rupees. Earlier it was 10, now 4 sold. Now in my stock there is 6 rupees. 4 rupees came inside the business. Cash position increased. So if the stock decreases, cash position increases. It means if what I have done, add what? Changes of current assets or current liabilities which will increase cash. Which changes? That is increase. Increase of what? Or decrease? Decrease of what? Current assets. Or suppose decrease of current assets is 100. Suppose decrease of current assets is 100. And because current assets decreases, so cash position increases, so we have to add. Because of this, the cash position increases. And this is what? This is the items of current assets which we have considered in fund flow statement in the schedule of change in working capital. There we have seen the current assets increases, working capital increases. Here current assets increases, cash increases. Current assets increases, working capital increases. Here current assets decreases, cash increases. That is 100 rupees. Reverse. There current assets increasing, working capital increasing. Here current assets increasing, cash decreasing. Here current assets decreasing, cash increasing. यहां पे स्टॉक घटा मतलब आपने बेचा मतलब आपके पास कैश आया. It means our cash increases. And because the cash increases, so we have to add in funds from operation. The reverse in the case of current liabilities. Because decrease in current assets will increase cash, so increase in current liabilities will increase cash. Suppose this is 200. Increase in current liabilities. Increase in current liabilities means I have 200 rupees in my pocket. but I purchased the stock on credit basis. Then what happened? 200 of Pepsodent or Sensodyne we purchased, but I did not pay cash at the time of purchase. Then what happened? The cash position of the pocket is become more heavier. That is, cash position has increased. So why the cash position has increased? Because we postponed the payment at the time of purchase. To whom? We purchased from the person. That person is called creditors. Creditors has given me credit facilities of 2 months. So I will pay back the amount after 2 months. So that amount is in my pocket. So it means what? If the current means creditors is increasing, and creditors is one of the current liabilities. So it means if the current liability is increasing, cash will increase. Maybe the other bills payable, current liabilities, creditors, whatever the current liabilities will increase, cash will increase. So here increase in current liabilities is 200, and because of this the cash is increasing, so you have to add. So increase in current liabilities and decrease in current assets will increase cash, so we have to add. Very simple now. What we deduct? Just reverse. That is, changes in current assets or current liabilities which will decrease cash. Here, decrease in current assets is increasing cash. Here, increase in current assets will decrease cash. Reverse, inverse relationship. Here in decreasing, here is increasing, will decrease cash. Increase in current assets, suppose 50 rupees. Here, increase in current assets, increase in current liabilities will increase cash. Here, decrease in current liabilities will increase cash. Creditors. Amount of creditors in 2019 is 10 rupees. In 2020 is 4 rupees. Where 6 rupees gone? We have utilized cash. We paid cash to the creditors. So paid cash means the cash flushed out from the pocket. It means the cash position of the organization will decrease. When the amount of creditors will decrease, the cash position decreases. So here decrease in suppose 40 rupees. So when you add this will be 1100 and this is 90. So amount will be how much? 10, 0, 1. 1010 rupees. And this 1010 rupees is what? This 1010 rupees is cash from operation. I have prepared separately so that it looks good. Here I have seen PL account, here I have prepared funds from operation, and here I have prepared cash from operation. You can incorporate everything in only cash flow statement, no problem, but it looks more clumsy, not look good. Maybe the organization's financial manager will confuse. But if I will prepare fund from operation separately, and from this here 800 will right here. From where 800 comes, the person will see fund from operation. After that we prepare cash from operation here. This cash from operation we will write in cash flow statement. It looks good. From where 1010 came, you should see cash from operation. Very clear. Everything is crystal clear to understand. Is that clear? Any problem? If not, then we will discuss again the remaining part of this cash flow statement, that is cash flow statement. Okay? It means what? It means you see the changes, you see the difference in fund. Now we will differentiate fund from a fund flow statement and cash flow statement. Fund flow statement, you consider the broad sense of fund. In cash flow statement, we have considered the narrow sense of fund. In fund flow statement, we prepare schedule of changes in working capital to see the impact of changes of current assets and current liabilities on working capital. In cash flow statement, we have seen that we have not prepared cash flow statement, we have not prepared schedule of changes in working capital, but we have considered the impact of current assets or changes of current assets and current liabilities on cash. In fund from operation, we prepare funds. In fund flow statement, we prepare fund from operation. In cash flow statement, also we prepare fund from operation. And in funds, after calculating fund from operation, we will add all those items which we have considered in schedule of changes in working capital. Here we will add or subtract. Is that clear? So, in Hindi I can discuss once. In fund from operation बनाने के बाद इसमें हम उन सभी एलिमेंट्स को डालते हैं जिसको हमने शेड्यूल ऑफ चेंजेस इन वर्किंग कैपिटल में देखा. वहां हमने देखा करंट एसेट्स और करंट लायबिलिटीज का इंक्रीज और डिक्रीज का वर्किंग कैपिटल पर क्या असर पड़ता है. यहां हमने देखा इंक्रीज और डिक्रीज इन वर्किंग कैपिटल का कैश पर क्या असर पड़ता है. जिससे कैश बढ़ेगा उसको हम यहां ऐड कर देंगे, जिससे कैश घटेगा उसको हम डिडक्ट कर देंगे. तो किसको ऐड करेंगे? करंट एसेट्स का घटना, कैश का बढ़ना. जब करंट एसेट्स घटेगा, जब स्टॉक घटेगा मतलब कैश आया, स्टॉक को हमने बेचा. इंक्रीज इन करंट लायबिलिटीज, करंट लायबिलिटीज का बढ़ना. हमने उधार खरीदा क्रेडिटर से, लेकिन पैसा हमने पेमेंट नहीं किया. पैसे मेरे पॉकेट में है, हमने पेमेंट नहीं किया, मेरा कैश पोजीशन बढ़ा. सो इंक्रीज इन करंट लायबिलिटीज विल इंक्रीज कैश. नाउ रिवर्स, डिडक्ट. Which impact we will deduct? Increase in current assets will decrease cash. स्टॉक बढ़ता है. कैसे बढ़ा? क्योंकि हमने परचेज किया. तो क्या हुआ? हमने पैसा दिया. तो क्या हुआ? कैश पोजीशन घटा. सो इंक्रीज इन करंट एसेट्स विल डिक्रीज कैश, सो वी हैव टू डिडक्ट. व्हाट एल्स? डिक्रीज इन करंट लायबिलिटीज. हमने जिससे उधार खरीदा था उसको हमने पैसा पे किया. पैसा पे किया, मेरा कैश पोजीशन घट गया. उसको डिक्रीज इन करंट लायबिलिटीज विल डिक्रीज कैश 40 रुपीज. तो 800 फंड फ्रॉम ऑपरेशन आया. इसमें हमने ऐड किया 100, 200, तो 18, 800 में 300 जोड़ दिया 1100, 1100. इनको हमने घटा दिया, ये हो गया 10,000, 1010, 1010. एंड दिस इज व्हाट, दिस इज योर कैश फ्रॉम ऑपरेशन. इसे आप सेपरेटली भी बना सकते हो, चाहो तो हम कैश फ्लो स्टेटमेंट में सबको इनकॉर्पोरेट एक ही जगह कर देंगे तो वो कम क्लमजी दिखेगा, इसलिए वहां हम नहीं डालेंगे. हम अलग अलग बनाएंगे. फंड फ्रॉम ऑपरेशन अलग बनाया. कैश फ्रॉम ऑपरेशन बनाने में केवल बैलेंसिंग फिगर को हमने यहां डाला. इसमें फिर शेड्यूल ऑफ चेंजेस इन वर्किंग कैपिटल के हर एलिमेंट्स को डाल दिया. कैश फ्रॉम ऑपरेशन बना दिया. अब हम कैश फ्लो स्टेटमेंट बनाएंगे तो ये बैलेंसिंग फिगर को हम वहां डाल देंगे. हमारा फंड फ्लो स्टेटमेंट विल लुक्स वेरी गुड. इज दैट क्लियर? थैंक यू वेरी मच. नाउ वी विल डिस्कस कैश फ्लो स्टेटमेंट जस्ट आफ्टर 10 minutes.